Welcome to the Deep Dive. Today we're zeroing in on Allison Transmission Holdings Inc. That's ticker ALSN. Now, they're a global force in fully automatic transmissions, and increasingly they're making moves in electrified propulsion for commercial vehicles.
Yeah, they're involved everywhere, really. On highway, off highway, defense applications, and they have a pretty significant aftermarket business, too.
And the idea here is to give you a solid, quick grasp of ALSN, the key insights, their market position, what really matters for them going forward, basically cut through the noise.
Right. We've got a recent research report and their Q1 2025 earnings call transcript, so we've done the homework to pull out the must-know information for you.
Exactly. Our mission for this deep dive: extract the essentials, Allison's business model, how they compete, their growth plans, the risks, what they've been up to lately, and what to keep an eye on. So let's just dive right in. Fundamentally, what does Allison Transmission do?
Okay, at its core, Allison designs, manufactures, and sells fully automatic transmissions. And like you said, they're getting bigger in electrified propulsion solutions, too. They're a key piece in keeping a whole lot of commercial vehicles running.
Makes sense. And you mentioned different sectors. Maybe we can break down their main lines of business.
Yeah, that helps clarify things. There are basically 5 main areas. First up is on-highway.
Okay, on highway, what falls under that?
We can split that mainly by geography. You've got North America and then outside North America. Inside North America, it's a broad range, medium-duty trucks like Class 6 and 7.
The delivery trucks and things like that.
Exactly, and school buses. Then you go up to heavy-duty, Class 8 straight trucks, and importantly, vocational vehicles.
Vocational, remind us what those are again.
Think garbage trucks, dump trucks, cement mixers, fire trucks, vehicles built for specific, demanding jobs, often lots of stop and start driving. They even do motorhomes.
Got it. Tough jobs. What about outside North America?
Outside North America, it's still commercial vehicles, but a big focus is trying to convert fleets from manual transmissions over to automatics. There's a lot of potential in emerging markets.
Oh, interesting. So automatics aren't standard everywhere.
Not at all. Outside North America, the penetration rate for automatics is actually really low, something like only 5%. So huge potential market, but, well, they're up against established preferences for manuals and definitely price sensitivity.
Great. 5% is tiny. A big opportunity, but a tough sell maybe.
Oh.
Okay, what's the next business line?
That would be off-highway. This is for really tough operating conditions. Think mining those giant, wide-body dump trucks.
Massive machines.
Yeah. Also construction equipment, vehicles used in oil fields like drilling rigs, and other specialty stuff like cranes. For these applications, reliability and durability are absolutely paramount. Downtime is incredibly expensive.
You bet. Okay, that's off-highway. You also mentioned defense. That sounds specialized.
It really is. They provide transmissions for military vehicles, both tracked ones like tanks and wheeled ones, and they're doing more with hybrid propulsion systems now.
Hybrid for military. Why?
A key advantage is silent maneuverability. Being able to move quietly is a big deal tactically, reduces detectability. They work closely with the U.S. Army and other international defense partners. It's pretty high-tech stuff.
Silent running. Fascinating. Okay, moving towards the future now. What about electrification?
This is clearly their long-term play. They're developing electric hybrid systems. They've had success with buses there and also integrated e-axles.
E-axles. So the electric motor is part of the axle.
Exactly. Integrated right in. They're doing this for commercial and military vehicles. Their whole approach is kind of modular, using common building blocks like inverters, e-motors, gearboxes, and those e-axles to create different electrified powertrain solutions. It positions them for that shift to EVs.
Smart. Building blocks for different needs. And the last one was aftermarket.
Right. Aftermarket is all about supporting the transmissions already out there, selling replacement parts, service equipment, providing support. Given how many Allison transmissions are in use globally, this is a really nice, steady source of recurring revenue.
Recurring revenue, always good to hear. So those are the 5 lines. Can we maybe group them to make it a bit simpler?
Yeah, you can think of it in maybe 4 main buckets. First, the core on-highway and off-highway business, commercial, vocational, construction. That's the traditional heartland.
Okay.
Second, defense, focusing on those military needs, including the hybrid and electric side. Third, electrification, which is all about the future e-powertrains, hybrids, aiming for zero emissions eventually.
Right.
And finally, aftermarket services, providing that steady stream of parts and service revenue.
That helps clarify the structure. Okay, now the big question. How do they stack up against the competition? Who are they up against, and what makes Allison competitive?
This is where Allison really shines in some ways. Let's talk competitive advantages. First off, their market share is huge. In key North American medium and heavy-duty segments, they hold something like 80%. Globally, for on-highway fully automatics, it's around 60%. That's dominant.
80% in North America.
Yep.
Wow. How do they maintain that?
Well, it's built over decades. Strong relationships with fleets, strong relationships with the OEMs, the truck manufacturers. They often work together on custom engineering, integrating the transmission deeply into the vehicle design. That creates real barriers for competitors.
So it's not just the product, it's the integration and relationships.
Mm.
What does that dominance allow them to do?
It definitely contributes to their pricing power. Their transmissions have a strong reputation for quality, durability, reliability. They often make the case that the payback period is under 3 years because of lower operating costs and more uptime.
So customers see the value, even if it costs more upfront.
That's the argument, and it seems to work in their key markets. Another huge factor is high customer switching costs, once a fleet standardizes on Allison.
They're kind of locked in, right?
Pretty much. It simplifies their maintenance, their parts inventory, technician training. Switching becomes a major hassle and expense, so there's a lot of stickiness there.
It makes perfect sense. What else contributes to their strength?
Definitely strong brand equity. They're a trusted name. That reputation for quality and durability is powerful. Sometimes OEMs even use the Allison brand in their own marketing. Being seen as reliable is huge in this business.
Reputation matters. We talked about electrification earlier. How does their early investment play into this?
By getting into e-axles and hybrid buses early, they've positioned themselves as a serious player for the transition. It shows they're not just sticking to the old tech. It gives them a potential head start in some areas.
Trying to skate to where the puck is going, so to speak. You also mentioned something interesting, resilience in cyclical markets. How does that work?
Yeah, it's quite interesting. About 30% to 40% of their North America on-highway business is with municipal customers, cities, counties buying things like garbage trucks, snowplows, school buses.
Ah, government budgets.
Exactly, and those budgets tend to be more stable than the broader economy. So even in a downturn, that part of their business holds up better than, say, long-haul trucking, which is more tied to economic growth. It provides a nice cushion.
That's a neat structural advantage. And the aftermarket business adds to that stability, too.
Absolutely. It's around 23% of their sales, providing that consistent, recurring revenue stream. It really shores up their financial profile.
Okay, so they got a lot going for them. But no company's perfect. What are the challenges or threats to their competitive position?
Well, one big one is that limited international penetration we talked about. Only 5% outside North America. They face real hurdles there. Price sensitivity is a major one, plus that strong preference for manual transmissions in many regions. Cracking those markets is tough.
Yeah, that 5% figure really stands out. What else?
Competition in electrification is heating up. Big players like Cummins, especially after buying Meritor and ZF, are investing heavily in electric powertrains, e-axles. They're coming hard. Allison needs to keep innovating to stay ahead.
So the EV race is getting crowded. What about the core market risks?
They're still exposed to the cyclicality of the truck markets. Even with the municipal buffer, a major downturn in medium and heavy-duty truck production will impact them.
Can't completely escape the cycles. Any other risks?
There are always pricing and commodity risks. Steel and aluminum prices can be volatile while they have clauses to pass a lot of that through.
It's not always immediate or perfect, right?
Exactly. Big swings can still squeeze margins in the short term. And then there's technological disruption. The rise of automated manual transmissions, or AMTs, especially from competitors like Eaton, offers a lower-cost alternative.
AMTs, how are they different?
They're basically manual gearboxes with automated shifting and clutch control. They're generally cheaper and often preferred in long-haul trucking, where fuel efficiency is king and you don't have the constant stop-start of vocational work. AMTs could limit Allison's growth in that specific segment.
Okay, so different tech for different needs. Let's compare Allison more directly with some peers. How do they stack up against Eaton?
Eaton is really strong in those AMTs, especially for long haul. They're also much more diversified industrially, but their presence in vocational and medium duty, Allison's stronghold, is much weaker. They're playing a slightly different game.
Different focus. What about Cummins, particularly with Meritor now in the fold?
Cummins is aiming for vertical integration engines, transmissions, axles, now e-axles. They have a huge global footprint and are really pushing electrification, especially in heavy duty. But again, less dominant than Allison in medium duty and vocational.
Integrated powertrain approach. And ZF.
ZF is a global giant. known for innovation, particularly in e-mobility and advanced systems. Strong presence in Europe and Asia. Their weakness. Less penetration in North America, especially in Allison's core defense and vocational markets. So kind of a geographic difference in strengths.
Okay, bringing it all together on competitiveness.
Look, Allison's dominance in North American vocational, built on quality, pricing power, and those high switching costs, gives them a very strong defensible base. Their electrification investments position them for the future, though competition is fierce. They're highly specialized compared to peers, which is both a strength in their niches and potentially a limiter elsewhere.
A strong core with future bets hedged. Got it. Now, let's shift to their growth strategy. Where are they planning to go from here?
A major thrust is international market penetration. They want to take that value proposition, efficiency, durability, lower total cost of ownership, and use it to win share in markets still dominated by manuals. But as we said, overcoming price sensitivity is the key challenge there.
That international piece seems critical for long-term growth. What else?
Electrification initiatives are obviously huge. Developing those e-axles, hybrid systems, becoming an integrator of electrified powertrains for global customers. They want to capture more value per vehicle as the industry shifts. It's a definite long-term play towards zero emissions.
Investing heavily in that electric future.
Any other growth avenues? Yes, defense and municipal opportunities. They see steady growth potential there, expanding sales, pursuing global defense deals, and benefiting from fleet modernization efforts, particularly in emerging markets.
Stable, less cyclical markets. Smart.
And don't forget the aftermarket business. Continuing to nurture that recurring revenue stream is key. Plus, ongoing product development, improving existing lines like their 6000 series, and expanding into adjacent areas like they did with school buses in Brazil.
Continuous improvement in finding new niches. Anything else?
They're also using their strong position for pricing gains where they can, especially in North American vocational. And finally, capital deployment. They generate strong free cash flow, over $700 million mid-cycle, and they're using it for potential strategic acquisitions, especially in electrification, plus dividend increases and share buybacks.
A multi-pronged approach. How do the growth strategies of their peers look in comparison? Let's take Eaton again.
Eaton's pushing global adoption of their AMTs, the cost-effective option for long haul. They innovate around automation and efficiency across their broader business, but their electrification push seems less focused on Allison's core vocational medium-duty space.
More focused on AMTs and broader industrial efficiency. Cummins.
Cummins is all in on electrified powertrains via Meritor e-axles, heavy-duty focus. They're also expanding globally in emerging markets through OEM partnerships, leveraging that vertical integration they have now.
Heavy-duty electrification and global partnerships. And ZF.
ZF is really pushing the tech frontier in e-mobility, advanced powertrains, electrified systems, even looking at autonomous tech for commercial vehicles. They use modular designs for global needs and are developing tailored electric solutions for emerging markets and Europe.
Very tech forward, especially in electrification. So, analyzing Allison's growth strategy, what's the potential and what are the risks?
In terms of revenue and profit potential, international growth could be huge, but it's risky due to that price sensitivity. Electrification is clearly where the long-term market growth is, but profitability depends heavily on timing, volume, and beating the competition. Defense looks like a durable revenue source, and aftermarket remains a high-margin contributor.
A mix of high risk, high reward, and steady earners. How achievable does it all seem?
Their dominance in vocational, defense, and municipal provides a solid base for medium-term growth. That seems quite achievable. International growth will likely be slower, more of a grind. Electrification is achievable long-term, but it's going to be a battle.
And the biggest risks to pulling it off?
Their heavy North America dependence is a big one. Macro risks like an economic slowdown hitting infrastructure or fleet buying. And the very real risk that electrification rivals could simply out-innovate or out-compete them.
Concentration, macro factors, and competitive threats. Okay, final thoughts on the growth strategy.
It looks like a solid strategy with strong long-term prospects, especially leveraging their niche resilience while pushing into international and electrification. It's achievable in their core, but it carries clear risks in those newer growth areas. Their specialization really sets them apart from peers.
All right, that leads us nicely into execution risk. What could go wrong as they try to implement these strategies?
Well, that regional concentration risk is definitely an execution risk. Being 80% reliant on North America makes them vulnerable if that market slows significantly. And executing that international expansion profitably given the low starting point and challenges, is a major uncertainty.
Yeah, putting boots on the ground internationally and winning converts is tough. What about the EV transition?
There's significant electrification transition risk.
Mm.
Success really hinges on their e-axle and electrified powertrain tech gaining commercial traction. They face strong competitors, and EV adoption in their core heavy truck markets might take longer than some expect, delaying returns on investment.
So both technology adoption and market timing are risks. Any others?
Product segment dependence is one. Their dominance in vocational automatics is great, but growth in long haul is limited by AMTs. Relying so heavily on that specialized automatic segment could be risky if preferences shift.
Less diversification within transmissions itself.
Yeah.
And the usual suspects.
Yep. Cyclicality and cost pressures. Exposure to truck production cycles, even with the municipal buffer. And commodity price swings, steel, aluminum, plus potential supply chain hiccups, despite their pass-throughs.
Those external pressures are always there. And back to international.
The adoption risks in emerging markets are significant from an execution standpoint. Convincing those price-sensitive buyers to choose a premium automatic over a cheaper manual is a big hurdle to overcome in practice.
Definitely a tough sales pitch in some places.
Yeah.
How did these execution risks compare to peers? Let's look at Eaton.
Eaton's diversification reduces single market risk, but maybe dilutes their focus. Their AMTs could lose some ground to automatics in certain applications, and their more limited electrification investment could be a risk if that transition accelerates. They're less exposed to Allison-specific risks, but maybe missing some upside, too.
A different risk profile due to diversification. Cummins.
Cummins has execution risk tied to their legacy combustion engine business, potentially becoming obsolete faster than expected. Integrating Meritor smoothly is key. Developing and scaling their e-axle tech on time is critical. And they face intense competition in emerging markets, too. Maybe higher risk tied to the pace of technological change.
More exposed to the disruption, perhaps. And ZF.
ZF has high R&D costs for e-mobility, so profitability depends heavily on scaling that successfully. They face demand volatility in emerging markets. Their weaker position in North American vocational and defense limits them there. Execution hinges a lot on winning the e-mobility race globally.
Big bets on innovation and global EV adoption. So, summing up Allison's execution risk.
I'd say it's moderate overall. The North America concentration and slow international uptake are the main concerns. But their leadership in specific niches and perhaps a more cautious, targeted electrification approach might mean less disruption risk compared to Cummins or ZF. Their focused strategy probably leads to more controllable risks than some peers' broader ambitions.
Okay, moderate risk, focused strategy. Let's turn to recent business updates and trends. What came out of their latest earnings call, Q1 2025?
A few interesting things. They welcomed a new CFO, Scott Mell, emphasizing his industry experience. Big news on the defense front. Allison's 3040 MX transmission was picked for all the OEMs competing for India's future infantry combat vehicle prototype.
All of them. That sounds significant.
It is, potentially several $100 million in revenue over 2 decades. It really highlights that international defense growth angle.
Definitely one to watch. What else?
Daimler Truck North America, DTNA, is making Allison's FuelSense 2.0 neutral at Stop Technology standard on Freightliner and Western Star trucks.
FuelSense. What does that do?
It automatically shifts the transmission to neutral when the truck stops, saving fuel and cutting emissions, especially in stop-start city driving. It shows they're still innovating in their traditional products, too. They also mentioned expanding their service network in Japan and West Africa, supporting that international growth push.
Okay, core innovation plus global support. What did they say about the broader operating environment? Geopolitics, supply chains.
They acknowledge the uncertainty from geopolitical tensions and trade shifts, but feel their global footprint gives them flexibility. Importantly, they noted over 85% of their direct material spend is in North America, mostly U.S., with minimal sourcing from China. That suggests some supply chain resilience.
Less China exposure is probably seen as a positive right now.
Probably. They also reiterated their long-term supply agreements help pass through most steel and aluminum cost changes, and that 30-40% municipal business in North America provides stability against macro headwinds.
Good points on managing external factors. How do they actually perform financially in Q1?
Net sales were down 3% year over year to $766 million. But within that, North America on-highway was actually up 4% thanks to pricing and strength in Class 8 vocational. Defense was up 10%. These were offset by lower medium-duty sales.
So a mixed bag on sales, some bright spots. What about profits?
Profits looked better. Gross profit was up $12 million, $378 million. That was mainly due to those price increases kicking in, plus lower costs related to their UAW contract compared to the previous year.
Higher prices helping the bottom line.
Exactly. And net income jumped $23 million to $192 million. Diluted earnings per share were up 17% to $2.23, helped by higher income and fewer shares outstanding. Adjusted EBITDA margin improved too, up 90 basis points to 37.5%.
Strong profitability metrics then. How's the balance sheet and cash flow?
Looks solid. Net cash from operations was $181 million, slightly up year over year. Net leverage was comfortable at 1.43 times. They had plenty of cash and available credit.
And shareholder returns.
They continued their focus there. Announced their sixth straight annual dividend increase. It's up 80% since 2019. They also added another $1 billion to their stock repurchase authorization and bought back $150 million worth in Q1 alone. And importantly, they reaffirmed their full year 2025 guidance.
Sounds like a solid quarter financially, returning cash while sticking to their plan. What specific business trends did they discuss on the call?
They highlighted continued strength in that North American vocational market, driven by municipal demand and infrastructure spending consistent with what truck OEMs are saying. Medium duty in North America was down, as they expected, mainly due to inventory levels normalizing.
Okay, vocational strong, medium duty weaker. What about pricing?
Pricing was very strong in Q1, close to 500 basis points year over year. They expect it to moderate slightly, but still be strong for the full year, maybe just north of 400 basis points.
Impressive pricing power holding up. Anything else?
Their parts business was down sequentially. They attributed that to lower overall truck sales compared to the year before and just general normalization after some very strong years driven by replacements. Also, defense volumes are expected to ramp up significantly in the second half of the year.
Okay, strong pricing, normalizing parts, defense boost coming later. That paints a pretty clear picture. So let's wrap up with the keys to watch. If you're following Allison, what are the most critical things to monitor?
Number one, absolutely, is the pace of electrification adoption. How quickly do their core markets shift? That impacts their legacy business and the urgency for their EV tech to succeed. High importance.
Electrification pace, got it. What else is top tier?
North America vocational and medium-duty truck market trends, that's still 80% of their revenue base, so crucial. And related, the competitive pressures in electrified powertrains. Can Allison hold its own against Cummins, ZF, and others? Also, high importance.
Makes sense. What's next level down?
I'd put international market penetration there. It's vital for diversification, so watching their progress, or lack thereof, is key. Also, global economic cycles, how sensitive are their end markets? And defense budgets and geopolitical stability, given the growth potential in that segment. Medium-high importance for those.
Okay, international macro defense. What about medium importance?
Things like commodity price volatility, steel and aluminum still matter for margins. The execution risks on their big bets, like electrification rollout and the India defense project, and regulatory developments on emissions and efficiency, these can drive demand for their newer tech.
Regulatory pressures could actually be a tailwind for some products.
Could be, yeah. Also medium importance. Any competitive threats emerging in their core North American vocational market, you can never assume dominance lasts forever. And finally, maybe low to medium importance, but still relevant. Are their shareholder and capital allocation priorities, how they balance buybacks and dividends versus growth investment?
That's a really thorough list. If you had to boil it down to just the absolute must-watch items.
Electrification pace, North American truck market health, EV powertrain competition, and international progress. Those four probably tell the biggest story.
Excellent. So to quickly recap for everyone, Allison Transmission is this dominant player in automatic transmissions, especially for North American vocational trucks. They have strong competitive moats like brand, switching costs, and pricing power. They're making strategic moves into electrification and trying to crack international markets.
But they face challenges, right? The pace of EV adoption is uncertain, competition in that space is intense, and international growth is proving tough. Their recent financials show resilience, strong pricing, but also some volume headwinds in certain segments.
Exactly. And their future really seems to hinge on navigating that big transition to electric while defending their core and hopefully gaining ground overseas. Those keys to watch we just discussed will be critical indicators.
For sure. It's a company at an interesting inflection point.
It really is. So here's a final thought to leave you with. Considering Allison's very strong established position in traditional markets versus all the unknowns and competition in the shift to electrification, what might be the biggest surprise, positive or negative, that could unfold for them in the next few years. Something to think about. Thanks for joining us for this deep dive.
This content is produced by Compasscope.com. For more than 1,100 public listed companies, find detailed research reports, visual mind maps, earnings call analysis, and audio discussions on Compasscope.com.